Hey everyone, Mortgage Nerd here. So the Fed cut the interest rate, their benchmark rate, which does not affect fixed rate mortgages. It's only for adjustable rates. And everyone's freaking out, calling me, oh my God, my rate gone down. Can I lock at a lower rate? Just remember, it's like apples and oranges, or better said, where we're standing right now, it's like guavas or plátanos or bananas. So just because the guava tree is full of fruit doesn't mean that the banana tree is full of fruit. Now, sometimes they're happening at the same time, depending on the weather. It's kind of the same thing. It's the fixed rate mortgages sometimes are low depending on the economy, and sometimes the adjustable rate mortgages, the Fed rate is dropped because of the economy. But sometimes when you drop the Fed rate, the fixed rates go up because the Fed rate goes down because they're afraid of inflation. And fixed rates hate inflation because if the cost of money is going up and they're locking you now for 30 years, they want a higher rate because their money's going to be worth less later on. Don't think that because the Fed cut the rate 50 basis points or 0.5%, that it's going to have an effect on your interest rate, your fixed rate mortgage. Already, I posted the video yesterday about the coronavirus, the day that they also lowered the rate, that the coronavirus is the reason the rates are so low. Everyone's in a panic mode. It's almost like when a hurricane is about to hit Miami and everyone is out in the grocery store buying water. Well, everyone's buying emergency and masks. You know, that panic sets in. In China, 95% of car sales, they're down 95%. That's huge. Their entire car industry is about to collapse because of fear. So they're not buying cars. They're not traveling. The entire economy can collapse because of this fear. And so what we're doing here is we're lowering interest rates on the adjustable, but when there's fears, stock market goes down. When the stock market goes down, people say, let me take my money out of those stocks. I'm going to put them over here in safe bonds, like mortgage bonds. So those mortgage bonds start to increase in value and their interest rates start to go down. Look at yesterday's video. I explained all of this. Forget about the Fed rate. Who cares? Call me and say, Phil, is the coronavirus still a fear? Is my rate going down? It might be. I locked people in last week. The rates are pretty much the same. I don't know where things are going to be 2 months from now. But don't not refinance, because in a moment, we have a vaccine, rates will start to shoot right back up and you'll lose those lowest rates. So a bird in the hand is better than two in the bush. Phil Stevenson, PS Mortgage Lending, your mortgage nerd. Thanks.